Thank you, President Bullard, and thanks to Chairman Powell for sharing their thoughts on this conference and also on the significance of what we call the balance of our audience, right? Bringing together researchers, policymakers, community bankers, and regulators for this discussion today. And obviously, we have representatives from those disciplines in this room, and certainly virtually as well. Now, as noted a couple times, this is a conference that is sponsored by three individuals, three entities, the FDIC, the Fed, and CSBS. And later this afternoon, we will hear from acting FDIC Chairman Martin Gruenberg. And later this morning, we'll hear from Federal Reserve Governor Mickey Bowman. But first, we have an opportunity to hear from the Conference of State Bank Supervisors. So please join me in welcoming Tom Fite. Tom is the CSBS Chairman, and he's also the Director of the Indiana Department of Financial Institutions. Tom?
First, let me say it was kind of fun watching that historical video, and there's some people in the room that were in that video, by the way, that haven't aged a day, and I'm extremely glad I wasn't in the video from 2013, because you guys would be thinking, like, what happened to that guy? Like, he's aged 25 years and 10. So thanks, Jim. Thanks for having me here today, and thank you, President Bullard and Chairman Powell, also for your remarks. Great to see so many of you here today in person. Happy to welcome you all to the 10th Annual Community Banking Research Conference. As the chair of the CSBS Board of Directors, I also want to thank our co-sponsors, the Federal Reserve System and the FDIC, and I want to give a very special thank you to the Federal Reserve Bank for hosting us here at this event for now 10 years. I'm so glad we're back finally in person in this auditorium after 3 years. It's been I would all say, very strange 3 years. It brought a lot of uncertainty, it brought a lot of challenges, but I also have to say it brought a lot of ingenuity. As the late CSBS and CEO and President John Ryan, we've heard a couple times today mentioned, has said, the pandemic pushed us into the future and into using new technologies. Before the pandemic, I think that I, as a regulator, would have been shocked at the idea of doing full off-site examinations, and I wouldn't have been a big fan of mortgage loan originators working from home. And the idea of doing all this work over a virtual conference sounded to me more like something probably from the Jetsons, right? Remember back in the day, the TV screen talking back and forth? We all do it now pretty openly, right? But during the pandemic, I think we all learned how to adapt. We learned how to advance and to better use our resources. Here even today, we're in a virtual environment in this conference. Over the past 3 years, I think the importance of the community banking's relationship-centric lending has really shined. These banks worked with all their borrowers during tough times. They provided necessary flexibility and also the time needed for a business to reopen and to recover, saving many jobs all along the way. Of course, we all know that community banks also played a very sizable role in the facilitation of the payroll protection program as well. Over those same 3 years, the percentage of bankers who have said the adoption of new technology is extremely important has doubled in the CSBS National Survey of Community Banks. This really doesn't surprise me that much. Community banks have proven to be an incredible source of adjustment and invention. Consider even many, many years ago, back when I did have brown hair, by the way, ATMs and checking accounts were an invention both created out of the community banking system. Adapting, advancing, and better use of resources is important in today's world. I think about 10 years ago, I used my flip phone to make phone calls, only phone calls. And those of you that are laughing know it was actually about 4 years from me, not 10, by the way. I'm a late adopter. Last week, I sent $30 to a friend of mine on my phone, and I think we would all say right now, that device that you have in your pocket is probably more a banking branch than it is a communication tool. Financial services have to keep up with the technology and customer demands, but at its core, banking is still all about three things: taking deposits, lending money, and moving money. Community banks have an extra important dimension due to the relationships they have with their customers and their neighborhoods and the fulfillment of these three critically important financial services. I think we all know stories from back home, right? Banks that all operate in our states and what they do. We've heard many of these stories actually told right here at this conference in prior years. For me, this is my story. I remember a friend back home who owns a luxury boat dealership, boats that I can't afford, by the way, meaning more than a John boat with a 10 horsepower trolling motor on it. Indiana has about 80 lakes, so a boating business in northern Indiana is a pretty good business to be in. But during the last financial crisis, my friend's institution, which was a larger regional bank, decided just to get out of boat lending altogether. It cut off my friend's business completely, despite the fact that at that point in time, his business was actually booming. It created a pretty dire and immediate problem for his growing business. Or I should say it would have, if not for the fact that a community bank actually stepped in and understood the local demands, understood the business itself, understood what the business was doing for the local impact on the economy, and it's actually saved my friend's business. So that community bank didn't just secure my friend's line of credit, it also saved his company. Also, it meant people had jobs, right? And those jobs still exist today and are even larger now and more booming boat dealership. Community banks play an incredibly important role in their hometowns. With my job, I've literally driven through every small town in Indiana, probably 3 or 4 times, by the way, actually. I can see the difference in the towns that have a community bank and those that don't. Often, one without a community bank is left with a gas station and one flashing light. We've all seen those towns, right? And to me, I think when a community bank leaves town, what really happens is that town loses its heartbeat. As state regulators, we think about this quite a bit. The key to maintaining community banking options for future generations is to craft a successful model that maintains competitive core deposit essentials, respects the lending that grows local businesses, and allows for fair competition in a fast-changing world. I think that's an interesting challenge for a regulator. We know community banks have to be nimble. They have to compete with companies that are challenging the status quo of banking products. But that also means that we have to manage new risks, and risks that we need to successfully navigate, by the way. Our ultimate goal, I think, is to ensure that community banks are still around for another 100 years. This is why I think this conference is so important. 10 years ago, we all knew of and told many banking stories, just like my friend back home that owns the boat dealership. We also knew we needed more than just anecdotes. We needed research. That is how this unique event that unites academics, bankers, and regulators that all come together at one point in time was formed to create a greater understanding of the policy need to support the community banking model. The conference has matured quite a bit since then, as we all know. We've added the survey. It's given us a lot of insight from community bankers nationwide. We're looking to the younger generation with the CSBS Community Bank case study, which has encouraged many to actually join institutions and become employees of banks, but also even a couple regulators. And we welcome more than 21 new emerging scholars. In 2018, we were pleased to welcome the FDIC as a co-sponsor. Policymakers are paying attention, citing research from this conference on the Hill and in federal reports, and the data that we create will be used by researchers beyond this conference for many years to come. CSBS just launched a new website for the national survey that will be used eventually to allow researchers to gather data on a more granular level. Also, earlier this month, the Federal Reserve added the CSBX Community Bank Sentiment Index, which grew out of the national survey, by the way, to the Federal Reserve Economic Data, which we all know better as FRED. Through this conference, we built a huge amount of research and data that has shown the importance of value of community banks. We continue to learn how to better incorporate laws and tailor regulations to help these banks succeed. And for a decade now, we've brought together the minds of financial regulators, academics, and industry, all with the goal of better supporting community banks. I'm genuinely proud to have been a part of this conference for the last 10 years. I look forward to seeing what the next 10 years will bring. Unfortunately, I have to leave very quickly for Washington, D.C., but I'll be watching remotely from the airplane and in the airports. But it's good to be back here. It feels really good to be back here. And I think we'll find, as I have in many places in my life, when you get back to being in person, things become normal again very quickly. And it's good to see all your friends back in the audience again today. So thank you.